What is going on, everybody? What is going on? It is James Lee here from Celestin Capital. Before I start this video, I just want to wish every single one of you a happy new year. And I hope you guys find consistent profitability within the markets this year and beyond. Hope you guys are working hard towards achieving your dreams, whether it's trading related or just in life in general. I wish nothing but the best for you guys this entire year and beyond. And with that being said, let's go ahead and hop into this video. This video is going to be about directional bias within the markets. Now, for those of you that don't know, directional bias is simply market structure. Being able to determine which way the market is going to go, having the odds in your favor. Because remember, trading is a probabilities game. That means that, that to begin with is 50-50. The market's either going to go up or the market's going to go down. Now, to increase the probability or to make sure that probability is in your favor, so instead of it being 50-50, maybe it's 60-40 in your favor or 70-30, whatever the case is. You want to increase the chances of you winning a trade and you being able to determine which way the market is going. And now this is besides the point, besides the fact of being able to find a direct area or being able to enter the market, position yourselves in the market to win a trade, right? This has nothing to do with entry criteria. This is simply based on market structure. This video is going to be simply based on market structure, right? So we're going to look at supply and demand zones. We're going to look at market structure. Those are the only two things we're going to look at today. We're not going to look at Wyckoff or anything like that or any swing points. We're just going to be focused on market structure and supply and demand zones. So this is going to be, although this video is general, it's still going to be highly effective because without market structure and without supply and demand zones, it's not really possible to determine which way the market is going to go. Trading strictly Wyckoff is damn near impossible just because Wyckoff happens everywhere. Because Wyckoff is simply buying and selling within the market. As you can see, the market's selling right now. The market bought up, the market sold, the market bought up a little bit, sold, bought up. It's just back and forth constantly, right? So if we can understand market structure and be able to have a directional bias, create a directional bias for ourselves, and we're able to position ourselves in the correct direction of the market, increasing the probability in our favor. And we're going to be looking at GU today. This is going to be my pair of reference for today, just so we can look at directional bias. Now, before we look at the live markets or back test, before we take a look at a back test, a simulated market, I want to actually show you guys something. So again, as I told you, if you understand market structure, we're going to take a look at a bullish market just to keep it simple. So bullish market, higher highs, higher lows, right? Now, as smart money traders or even, other traders, our entire philosophy is to be able to capitalize on the markets, right? Be able to capitalize on the bullish nature, in this case, of the market. So we want to be able to position ourselves correctly so that we are able to capitalize on these moves, right? Capitalize on the entry to take advantage of the moves that happen within the market. You want to get in on demand zones for a bullish market and supply zones for a bearish market, right? So that's the general idea of what directional bias is. So let's actually take a look at something a little deeper. So we have a bullish market right up here, right? So here we have a bullish market. And again, understand that the market is fractal, which means whatever happens on a higher time frame happens on a lower time frame. So we have a bullish market right now. I'm going to put just a circle right here. So this black represents the 4H. Now on the 4H, you may see a bullish market, right? But if we go down to something like maybe a 1 hour or 15-minute, let's say orange 1 hour. Oops, I need to do that. Let's say orange, make that orange equals 1H. Orange equals 1H. You may see something like this. You may see breaks of structure to the downside, like a selling market, bearish market, a temporary bearish market, then you may see bullish again. But ultimately, this is following a higher time frame. And this is what I'm talking about when I mean directional bias within the market. You're going to see things like this happening on a lower time frame. So even though the 4 hour is bullish, on a 1 hour, you may see something like this structure being broken both ways. But ultimately, it is following the higher time frame. As you can see, something like this might be happening. And I'm just going to hurry up and do this, right? Something like this happening. And on an even lower time frame, we may see something like this. So let's say the green is 5 minute equals 5M. On a lower market, you may see something like this. Oops, I lost it. Darn it. All right, here we go. We're back. Don't worry, guys. Don't worry. So on this green, you may see something like this. You may see microstructure just going it may look crazy and make it look noisy, right? But ultimately, it's still following the higher time frame. Now, for directional bias, you may see it breaking structure to the upside, downside. You may see something even more uh, uh, crazier, even more crazy than the 1 hour, right? But ultimately, it's still following the 4 hour, the 1 hour, and the 4 hour. So, directional bias is being able to look at the bigger picture, which is what? The higher time frame, which is the 4 hour in this case, being able to look at the bigger picture and being able to determine how you can position yourself into the market so that you're not caught off guard by these smaller time frames. So you're not liquidated out of the markets, or you're not confused by these lower time frames. So we want to look at the bigger picture and be able to position yourselves within these demand zones so that you can take the market to the upside. And that's the entire idea of directional bias, aka market structure. Let's take a look at live examples on GU. Let me delete this really quickly before I go anywhere. Let's take a look at GU. All right, so I'm gonna go ahead and do this. I'm gonna make it smaller so there's no cheating involved in this video. No cheating, right? I want you guys to think I cherry pick these trades. So as you can see, I can't really tell. Well, let me do this actually. I can't really tell. I want to go on 1 hour. Actually, 4 hour. That's fine. So as you can see, I can't tell whether the market is bullish or bearish, and I'm just going to keep scrolling back and forth. 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 So now I'm going to stop here, and we're going to start from here. So let's see. Again, directional bias. We want to look at the bigger picture of the market. We don't want to be shaken up or confused by these smaller time frames. As you can see, look at this. Look at this. Already confusing. These smaller time frames. So as you can see, we're on the 4 hour right now. But let's take a look at the daily. The daily is telling us something different. The 4 hours was what? 4 hour was bearish, right? But the daily, as you can see, is bullish. So what can we expect? As you can see, we are currently in a bullish market. So you can see structure is something like this. Structure, structure. And what are we doing? Potentially coming back to some lower demand zones to continue to the upside, right? So what do you want to do? You can potentially position yourself. You can position yourself for a sell, but don't expect something like this, right? Now, this may happen, but at the same time, we want to increase our probability, right? If the market is bullish, why do we want to look for sales to continue, right? So again, it's a probabilities game. We want to be able to increase our chances of the market being in our favor. So just to start off, the market, we're 50-50 with probability, right? Because the market's either going to go up or the market's going to go down. It's going to go one way or the other. So we're at 50-50 to begin with. Now, in order to increase our chances to change it from 50-50 to maybe a 60-40 or 70-30 in our favor, we want to be able to use market structure to help us. Use market structure, supply demand zones to help us. So if I know on a higher time frame the bigger picture is bullish, why do I want to look for sales? That's decreasing my probability of the market going in my favor, right? So Again, you can look for sells, but somewhere down to here because we're expecting this area to get mitigated and for the market to continue up. So let's see. Let's see where we are right now. Currently, we are. Let me get rid of this. Currently, we are daily bullish, 4 hour bearish. So we can maybe position ourselves for a sell. Again, we're not looking for Wyckoff or anything, just simple supply demand zones, just to take it up and down wherever we want to go. We're not looking for anything major. So if we get a break of this low, we're going to look for a sell down to the demand zone. Again, we're not looking for long-term bearishness. We're looking for short-term bearishness to continue to the upside. So this demand zone to continue to the upside. And that's what allows probability to be in our favor because the market's still bullish in the bigger picture. So let's see what happens. Again, we get a break of this low right here. So that's you, not yet. So nope, still not. So we're looking for a mitigation of something right here. So let's see if we get that. As you can see, the market's breaking down. So let's take a simple trade off of, I don't know, this demand zone right here, stop loss right here. Again, we're not worried about positioning ourselves with Wyckoff. We're just looking simple supply demand zones. And let's say we did something like this. See what happens. So we got stopped out on this trade. But as you can see, the market is heading to our higher level zone that we have marked up. So let's say we take a trade off of here. Stop loss right here. Oops. So ultimately we got stopped out on this one as well. So again, we want to look at the bigger picture of the market. As I told you guys, why are we looking for sells when the market is bullish? And this is where I messed up just now, as you can see. Directional bias, being able to position ourselves. So I can see we broke this high, so we're going to look for a sell for buys to continue to the upside. Something like this. Oops. So as you can see, taking simple trades, we're following the flow of the market. Following the flow of the market. On the daily, again, we're bullish, following the flow of the market. So let's go on a weekly and see what we can potentially sell from. We could potentially sell from weekly right here because, again, although the daily is bullish, the weekly is bearish right here, as you can see, right? So it's safe for us to look for sells when price gets in this supply zone, right? Rather than me trying to force a sell down to the daily demand zone to continue to the upside, we can just take sells from this supply zone. So let's see, where are we? So we're in the weekly supply zone. Let's say we take a sell from the weekly supply zone. Let's just, I don't know, throw a sell in right here. Oh, that's not a sell. So we throw a sell in right here. We decided to sell right here. Again, as you can see, market structure for weekly is bearish, while the daily is bullish. But we want to look at the bigger picture. So we're taking this to the downside, as you can see. Taking this to the downside, see if we can speed this up. So as you can see, we're positioning ourselves correctly just purely off of market. Oh, that's the end of it. All right, we're positioning ourselves correctly purely off of market structure. And being able to determine directional bias gives us an edge in the market. Being able to see the bigger picture gives us an edge in the market rather than just strictly trading Wyckoff or not knowing where structure is headed. So understanding structure, understanding where structure is headed, looking at the bigger picture is good for us in positioning ourselves to capitalize within these moves. As you can see earlier, I tried to force sells on the 4 hour, even though the daily was biased. And as you can see, they didn't work out for me. But once I placed this one buy easily covered those losses. This one buy easily worked out because why? I decided to follow the flow of the market rather than trying to force sells, rather than trying to force something that wasn't there. All right. So again, those two sells that I had didn't work out, but this one sell, or was it one sell? I think it was those two sells that I had didn't work out, but this one buy worked out nicely. As you can see, when I'm looking at the bigger picture, which is the weekly, so far this sell is working out nicely. And the crazy thing about it is that this works on any time frame, right? If we drop down to the 1 hour, if we go to the 1 hour, we can look for, I don't know, we can look for, oh shoot, I can't go that far back. All right. If we go to a 1 hour, we can see, let's see, 1 hour. If we drop down to the 1 hour, we can see the same thing. Higher time frame, 1 hour shows us bullishness. But if we were to drop to, let's say, the 5 minute, it would show some bearishness within here, show some bearishness within here. Because why? The market is fractal. And even though it's fractal, it's still following the higher time frame of the 1 hour, which is still bullish. And so that's the entire video for you guys. I hope you guys learned something. I hope you guys learned not to force anything, just like I tried to do earlier. And, once you understand, once you're able to go with the flow of the market, you're able to determine directional bias. You're able to basically capitalize on many of the moves in the market. Just like you can see this sell playing out here. And I was able to take advantage of this buy as well up to our sell zone, right? Because I was simply following the bigger picture. Guys, I want you to think about the bigger picture. All right. Now, when it comes to entry criteria, then you can go ahead and go to a lower time frame, but that lower time frame has to be in line with the flow of the higher time frame, with the bigger picture. It has to be in line with the bigger picture. All right. So 2022, guys, think about the bigger picture when it comes to trading, when it comes to your life, when it comes to anything. And I hope this video made sense to you. I hope this video helped you out in some kind of way. If you guys have any questions, leave them down in the description below. If you like the video, go ahead and hit the like button. If you did not, then hit the dislike button twice. All right. Make sure you hit it twice, an even number of times. Be 2 times, 4 times, 6 times. Just make sure it's an even number of times. All right, guys. Peace out. If you want to stay tuned for more content, be sure to subscribe. Again, the road to FTMO 6-figure challenge, that is still up. Don't worry, guys. I haven't forgotten about it. I told you, second week of January. Second week. We're in the first week right now. Excuse me. We're in the first week of January right now. We are going to. So the second week of January is probably somewhere around the 6th, I think. Somewhere around there. So again, expect an entire series from me from start to finish of me becoming a 6-figure trader. All right, guys. Peace out. Enjoy your new year. Happy New Year.